Hello guys, and welcome back to a new video. Today I'm going to show you how you could have caught this move on NQ using the 930 strategy, a strategy that lets you trade 10 minutes a day. That's all you need. You only trade the 930 volatility with simple rules. So I'm going to show you the strategy in a more organized way. I already shared that on my channel, but a lot of people didn't really understand it, so I'm gonna show it. So I'm gonna show it to you like this. All right, more organized, 4 steps. That's all you need. All right, and then I'm gonna show you the trade that you could have taken today using those 4 steps. All right, and how you can trade it every single day. Every single day, you log into the chart at 9:30 to determine if there is a valid setup or not. All right. Before we start, a reminder that the 91% off on the Bullnox future accounts are back again. A lot of people ask me about when they're gonna do a 91% off again, but it's only for the 50K and above. All right, so that's gonna cost you about $17. All right, for this 50K. For the 25K, there is an 83% off. So you're gonna have to decide whether you want to 25K for 83% off or the 50K and above for 91% off. But here's the coupon code for this one, Stranger or Stranger25. All right, now let's get back to the strategy and explain to you the steps one by one. Let's go to start with the first step, and it's extremely easy. All right. First of all, you need to define the bias. Alright, this is not some complicated methods to determine the bias. Alright, there's no extra tools that you need, just simple idea whether we want to go up or down, because the other steps are going to confirm the bias. So you don't need to have a 90% accuracy on determining the bias. You're gonna let the other steps confirm that. So look at the current trend. That's the easiest way to define the bias. Just look at the current trend and trade with the trend. All right, you don't want to go against it unless there is an exception, if the market is overextended and pulling back or consolidating. So now the target is the imbalances that were left behind from the previous leg. This one is very easy. Let's talk about the exception. Suppose that we have something like this. All right. Here the trend is obviously bullish. All right. But if we talk about this leg, we have a huge expansion to the upside, and now we started consolidating, or it can be something like this. So we are either consolidating like we have today, or we are slowly pulling back. Now you're not gonna go with the bias, obviously, or you're not gonna go with the trend, because we left a lot of imbalances and you can expect a pullback. So now the trend is actually to the downside rather than the upside, because there is a trend to balance all of this, right? You can expect price to keep just printing infinite moves to the upside. That's the exception, and that's it. That's all you need to know for step 1. Now let's go to step 2. Again, very easy. Step 2, you need to wait for a manipulation. The window is 9:25 to 9:35 New York time. It can be before that, it can be just after that, but mostly you're gonna find it's gonna happen in this time window. So what is a manipulation? You need to watch for price to fake out against your bias. So if you have a bullish bias, you need to wait for price to sweep below a swing low. All right. If you have a bearish bias, wait for price to sweep above a swing high. In this case, from step 1, we determined that price is likely to trade to the downside, just like it happened here, although this is not the most necessary, because you can see from this previous leg we already balanced the imbalances here. This is why we have just a short one here. You can see here it happens all the time. So from the bias, we determine that we want to go down. From step 2, you want to see price trades above a high. So bearish bias, you want to see manipulation above a high. Now step 3 is identifying the confirmation level. So after that sweep, you need to mark a level that proves that the sweep was only a manipulation. So that spike to the upside against the bias is only manipulation if that level that you identified is getting violated. So for a bullish bias, an imbalance above, it can be an imbalance or it can be a swing high that if broken confirms the confirmation, all right, the continuation, all right. For a bearish bias, just like we have today, an imbalance below or the swing low that if broken confirms the continuation. So sometimes it's going to be an imbalance. Most of the times it's going to be a swing low or a swing high. So suppose that we have something like this and price around that window, it trades to the upside and manipulate above this high, for example. Now here you can have either this level, which is the low, or it can be an imbalance right here. But if you want to be safe, use lows or highs. So that's the level, all right? That's the confirmation level. That means that if price after that manipulation it trades below it, that confirms that this is just a manipulation, this leg right here, all right? Now step 4 is the entry execution. Place a buy stop if bullish or a sell stop if bearish, all right? Stop, not limit. Just beyond the level from step 3, and you're gonna let the 930 volatility trigger you into the trade, into the direction of your buys. Why stop? Why not limit or market? Because the volatility is gonna be really high, and most of the times you're not gonna get a retest or a pullback to get you in, all right? In today's example, I believe we had a chance to get in. Most of the times you will not have that. So that's the strategy in 4 simple steps. Now let's go to the chart and try to find that from today, all right? And then I'm going to show you the trade that I took. So now from the buys, we know, or we have a good idea that price is likely to trade to the downside, and we're going to let the rest of the steps confirm that for us. Let's go to the lower time frames and see what happens. So around that time, look what happened. We have a manipulation to the downside, all right, to take that low. Now, is this valid? No, it is not valid, because from step 1, we defined or we determined that the bias is to the downside. Just because on step 2, price traded or manipulated below and our bias is bearish, it doesn't mean that you're going to flip the bias. You're going to stick with it, all right? And look what happened next. We need from step 1, we need for price to manipulate higher. It didn't, it manipulated lower. What happens next? We traded to the upside, and then we manipulated above a high, right? Now, this is what we're looking for. Now we have something to wait for. Now we can move on to step 3, all right? Step 2 now is checked. Also, if we pull out the US 100 chart for more confluence, we can see that this leg right here, the manipulation leg on US 100, it took all the heights from here, while on US 100 it didn't. So what this represent, or what is the significance of this? It tells you that US 100 is weak, all right? It means if price actually trades to the downside, it's going to give you the better move to the downside. It's weak. It couldn't take the highs, while US 100 or US 500 did. All right, that's just another confluence. Now that's step 2, we have that. Step 3 is identifying the level. Now we can see that this one right here is quote unquote protected low because it already manipulated below the low from here. If we are bullish, we're not, most of the times we're not going to revisit it again, and we're going to just continue to the upside. So that protected low if we are bullish. So if price stays below it, that's the trigger that we want to trade to the downside with our buys, and this is where you want to enter. All right, you want to put on step 4, you want to put a limit order right here, and see how price was violent when we traded below it from here. We did have a chance, all right, we did have a pullback, and most of the times you won't have that, so you better enter from here. And for the targets, don't be shy with the targets. Look at all these imbalances that were left behind, so you can either target the nearest one or the obvious one, the bigger one. For example, we have a smaller one right here, and then we have a bigger one right here. All right, this is what you want to target. And let me show you the execution right now. So here you go, here's a trade, and I exited from here. All right, and here's that manipulation to the upside. Right, now I believe that this is the end of this video. If you have any other questions, you can always DM me in my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Now happy trading and good luck.